Good morning, everybody, and thank you for joining me. I'm Donnie DeLange, and I'm going to take you through Italtile's interim results. Just a quick overview of what I'm going to talk about today. Going to take a look at the normal structure. First, we'll look at what Italtile does, followed by the recommendation. Then we'll take a look at their interim results, and we'll look into more detail into each division. Then we'll look at the company's guidance for 2018, and we'll finish off with a portfolio guidance. Okay, so first of all, what does Italtile do? Italtile is a franchisor and retailer of local and important tiles, sanitary ware and bathware, laminated flooring, and other related home finishing products. The group retails brands consist out of obviously Italtile Retail and also CTM and Top T. The group's retail brands are supported by a vertically integrated supply chain, as well as investments in key suppliers and an extensive property portfolio. The next slide just shows you where in Africa they operate. As you can see, from Kenya and Tanzania, Botswana and Namibia, then as well as Swaziland and Lesotho, and then the rest of South Africa. Now I'll jump straight to the recommendation. We feel the share is fully valued at trading at a historic PE of 16 times and 3.4 times in net asset value. The business has solid operating margins, a higher return on equity, and historically good cash generation. Their retail operations are strategically supported by a vertically integrated supply chain, investments in key suppliers, as well as an extensive property portfolio, like I mentioned earlier. And this translates into an impressive track record despite operating in a competitive environment with low barriers to entry. A stronger rand will lead to an increase in imported products, and the general oversupply situation across the market was contained by a shortage of containers, shipping delays, as well as supply disruptions in China. Next, the constrained consumer spending has led to consumers becoming more selective on their choice of retailers, and price rivalry and margin pressures persisted as the industry participants competed for the share of a reduced wallet. And the group performs well in this trading environment as brand portfolio extends across the income spectrum. Efficiency gains relating to the group's business optimization program will continue to help reducing margin pressure. The online shopping has created a more price-savvy consumer and changed consumers' expectations of the in-store experience, and the group has remained dynamic in this respect and continues to invest in shopping experience that appeals to traditional and new customers. Next, we'll just take a look at the financials. Just note the following. Following the completion of the acquisition, the group now holds a 95.47% stake in Ceramic and a 71.54% in Italtile. And this results from these businesses have been consolidated for the 3 months and are going to be referred to as manufacturing sales. So first of all, their system-wide sales, which includes franchise revenue, increased by 22% to 4.2 billion rand, with their like-for-like sales down 4% with price deflation of 1%. Then their manufacturing sales contributed to 1.1 billion rand to the total sales. Next, their gross profit rose 36% to 1.1 billion rand, resulting in a higher gross margin of 25.1%. The operating profit grew by 31% to 760 million rand, supported by a 3% decline in LFL operating costs. The group's adjusted operating margin improved to 16.8%, as you can see in this below graph here, and up from that 15.7%. And you can also see the revenue per share going nice and steady upwards. The supply chain efficiencies and well-managed overhead costs helped to absorb the impact of currency volatility and higher industrial input costs. The profit before tax increased by 25% to 706 million rand, limited by a net finance expense of 10 million rand compared to the net finance income of 13 million rand in the previous year. So ultimately, the headline earnings came in 17% higher at 507 million rand, and the diluted headline earnings per share only rose 6% to 48.4 cents per share, limited by a 10% increase in the weighted average number of shares in issues. This is mainly due to a share issue to fund the acquisition of Ceramic Industries. And they also declared an interim dividend of 17 cents, which is also a 6% increase in line with the headline earnings per share growth. Now we'll take into more detail of the different divisions. First, the retail sales from their retail group-owned stores declined by 1% to 1.7 billion rand, and their gross profit rose 2% to 597 million rand, and resulting in a 100 basis point improvement in the gross margin to 35%. The net profit before tax grew by 27% to 167 million rand, resulting in a higher profit margin of 9.8%. So CTM, they recorded a decline in market shares and sales, and this is mainly due to constrained consumer spending, but CTM managed to improve operating profit margins, their operating profit as well as margins. And if you take a look at the Italtile segment, that sales improved during the period as delayed projects were reinstated, and Italtile also grew market share, with profit and margins also improving despite price deflation. And finally, Top Tea sales, their profits and margins all improved, supported by a better merchandise range and consistently good in-stock levels. In the next division we look at is franchising. The turnover ended slightly higher at 1.4 billion rand, while the profit before tax declined by 2% to 102 million rand, resulting then in a lower net profit margin of 12.8%. Next, there's supply chain. That turnover fell by 23% to 939 million, while the gross profit only declined by 6% to 90 million rand, and this is resulting in a higher gross margin of 9.6%. The net profit before tax fell by 50% to 74 million rand, resulting in a lower net profit margin of 7.9%, down from the 12.1%. Then if you take a look at manufacturing, the group acquired an additional 74.5% interest in Ceramic, like I mentioned earlier, and that was for total consideration of 3.5 billion rand, increasing its effective shareholding to 95.5%. And through this acquisition of Ceramic, the group obtained a controlling stake in Italtile. Their manufacturing sales and gross profit amounted to 1.5 billion and 597 million rand, respectively, achieving a gross margin of 26.3%. Then their net profit before tax amounted to 179 million rand, resulting in a net margin of 16.8%. Then if you take a look at importing, destocking activities had an adverse impact on sales and profitability, and margins also came under pressure due to limited price increases to support cost-conscious consumers. Then lastly, property division, 12 new stores were added, bringing the total store network to 174 stores, and the property portfolio had an estimated market value of 3.5 billion rand at the reporting date. Then we'll take a look at the company's guidance for the rest of the year. Despite the improved outlook for South Africa following the recent political developments, management indicated that the macroeconomic environment remains challenging, and management expects a better second half performance supported by recent initiatives which were implemented. The group plans to add 10 new stores in the second half of the year, increasing the total number of stores open in the financial year to 22 stores, exceeding the prior guidance of 20 stores. The group is still awaiting approval for the acquisition of CTM Tanzania business, which would be a major growth driver, and the order books for the group's manufacturing businesses are growing, which should support higher sales and improve profits and margins. And lastly, management will focus on integrating newly acquired business and realizing synergies. Now we'll finish off with the portfolio guidance. Italtile has a capped fixed weighting of 0.12%. We would recommend exposure of 0.4%, but given that that is such a small percentage, we would recommend exposure of 0%. So thank you for joining me today. Just before we end off, please take note of the following disclaimer. And if you wish to place a trade, please contact the trading desk. Also, if you have any questions, you can type it into the chat box now. Thank you so much for joining me today. Thanks for your time and enjoy the rest of your week. Thank you so much.